Okay, everyone, we're back. We're going to quickly go through a number of charts here, kind of show you what we're looking at and how we're thinking about things. And so we're going to go through GE, Netflix, Apple, Microsoft, and Verizon. So let's take a look at GE. Long term, still in a very negative trend. Clearly, you can see the pattern. We all know the story. Major issues happening. So why are we showing you this? We're just going to give you some updates on the name since we're starting to look at it. We're not recommending a buy. We did call a bottom down in here. We were a little bit early, so it was a tough go for a few months, but we double bottomed here. Now we're making new fresh lower highs and higher highs. So that's a good sign. What do we like? What do we like? So we like the fact that we think this thing is bottoming out. Certainly, we're looking at 860 and $10 as an entry. Still above our entry, but creating a new base here. What we need to see happen is a breakout above 1261. Don't know when it's going to happen or why it's going to happen, but we do want to show you the stock since there is a lot of interest in the name and a lot of controversy surrounding it. So just keep it on your radar. Netflix, we're going to go through this one next. With Netflix, this thing has just had a super ride. Obviously, one of the best performers in the decade. And clearly, we saw a bottom down here in 2013 after it split up the two companies from streaming to mail and then raised its pricing. A lot of controversy around that. Since then, we've had the points here and right there, and then here and right there. That projection has shown you the trends. So when things are good, bad, we're trading at these levels. When things are good, we're trading at these levels. Clearly, we had a couple of points here and here where we thought were entries. Our target was right around 247 to 272. When we got through that, we started becoming negative on the stock. And now we are continuing to short Netflix. And we're going to show you where we're shorting it and why we're shorting it. So these are the levels that we like to short. Here and here and now here. So we're in full disclosure. We're short Netflix. We just started a position recently when we got above this 327 level. We were short right here, and actually we got short here, covered it too early, got a false move, and then we crashed. Missed the move, kind of stinks, but we're going to do what we're going to do. We're playing small right now, less than a 1% position. We're going to hold on to it. We think it goes back down to 260. We think Netflix has a lot of competition, and we think subscriber growth is going to slow. What we did realize also is that Goldman Sachs recently added it to its conviction list of companies that is going to outperform in 2020. We're going to be contrarian to that. We're going to take advantage of that strength, and we're going to use these major resistance levels as entry points for a short. Just going to highlight it. Apple. Let's move on to the next name here. I mean, clearly this has been just a monster. We have had numerous confirmations to buy the stock. The trend here is this has really been the long-term trend of the stock since the bottom in 2008, 2009. We've had numerous opportunities to buy the stock. Clearly, this new trend that developed in 2016 has created some opportunity. Last year, when the market sold off, we traded below the longer term trend right here, got above this 164 level. That was our confirmation. We've been long ever since. We think now that we're breaking out to these levels, this is probably a good place to take profits. Again, I mean, Apple is a great long-term play, but you know what? We're not going to add here. We're not chasing it. We think this is probably a good spot to take profits. We'd rather turn our money and go into Microsoft. So if you have a big profit in Apple, hey, take some profits. And if you don't own Microsoft, this is a great place to own Microsoft, and we're going to show you why. So again, let's go long-term. And you know, we've had these points since 95, right? So here's the bottom. So from this point in 2000 to this point in 98, that's been our trend. You can see Microsoft for many, many years. Look at this. How many years is that? 12 years we've based before we started making a move higher. We showed you this move in 2014 when we broke out right here. We can go into other technicals. I'm not going to do that. I'm just going to show you what we're looking at long term and where our target is. So since this major move, it's gotten back into long-term trend, held here, broke out here. This was really where we've had the most conviction on Microsoft, besides back in 2014 when we got above 29. This has been a new level. And again, we're continuing to see a lot of momentum in Microsoft. We think this is going to be a great play. If you have extra cash laying around, we see no reason not to deploy it into Microsoft. We're long Microsoft. This is a big position for us, and we're going to stick with it. What we like is this 155 level. If we can buy it here, phenomenal. If not, we're just going to continue to stay long. A break above, I don't know, 161. We have a short-term target of 181 and a longer-term target of basically 217. We think that 217 is basically where Apple is now. Technically, we think that Microsoft is, if it follows the same kind of path that Apple took, we think 217 is a reasonable target. That's 60 points higher. That's a huge move for Microsoft. We're very bullish on the name. Let's go into Verizon. Again, Verizon's kind of similar to Microsoft in the sense that we had this long-term consolidation. Here's a long-term trend of the stock. What we like. Held our key support level at 54, broke above our buy level at 57. We've been long since $57. We think that even though we've tested this 62.17 level a couple times now, we're optimistic. That's a new high. This is the highest the stock has traded since 2000. So we're expecting it to make a new high. The breakout point is right here at 62. This is the trend we think it's going to trade back into. Again, for the longest term, we were buy, sell, buy, sell, buy, sell. We were playing this range. Now we're seeing the breakout happen. The longer term technical picture looks great. We want to own this stock. We think that, you know, given the fact that so many people are shopping online, using their handsets, stock has a strong dividend. We think the cash flows are good for the company. We expect that you know, the dividend growth could really boost this stock, and we have no problem in a low interest rate environment with the Fed off the table. And when the Fed does come back into the table, there's going to be more reason to buy the stock. So you have two reasons to own the stock. Either the Fed starts to tap the brakes again and makes the stock more attractive, or the economy continues to heat up a little bit with low inflation, making the stock still be attractive. So this is a win-win in our view. It's also more of a defensive play. If you look at the S&P Consumer Defensive, again, you know, we've seen this breakout here, very similar to Verizon. We expect this to be a winner also. We're long this stock. The XLP, you know, technology continues to outperform, and we have no problem staying the course. But we did want to highlight a few stocks for you and give you a bit more detail about how we're looking at things. Anyway, hope it made sense. Any questions, feel free to contact us, post whatever you like, and we'll do our best to answer your questions.